Everybody loves a big tax refund, but here's the thing. Most people have no idea how to actually maximize their tax refund. Today, I'm going to teach you the 8 things that you can do to dramatically increase your tax refund. The larger your refund is, the more money you get to keep and put right back into your bank account. I'm going to answer some questions from some of you subscribers as well, so be sure to stay to the end of this video. Let's dive in. If you're unfamiliar with the tax refund, it's a refund that the government will actually pay you if your tax withholdings exceed your actual tax liabilities. So if you qualify for a tax refund, the government will write you a check. My goal is for your refund to be as large as possible, but the way in which you increase the size of your tax refund is to limit your tax liability as much as possible by taking advantage of key tax deductions and credits that you can qualify for. Let's go over some of the main things that you can do to maximize your tax refund. Number 1, maxing out your 401k and your IRA. Maxing out certain retirement accounts such as a traditional 401k and a traditional IRA can reduce your taxable income. The reason is because these accounts are funded with pre-tax dollars. When a retirement account is funded with pre-tax dollars, it means that the money goes into the account before it is taxed. So your contribution amounts are subtracted from your taxable income. But be aware that there are contribution limits, and for 2025, the limits for employer-sponsored 401ks is $23,500, and the contribution limit for traditional IRAs is $7,000. Step number 2, let's max out the HSA. HSA stands for Health Savings Account. With an HSA, it works like a 401k. Instead, it helps you to save for qualifying medical expenses, not retirement. However, although they both fund different things, they work in very similar ways. For example, you can make contributions to an HSA on a pre-tax basis, just like a traditional 401k. When you make contributions to your HSA, your taxable income is reduced by the amount of money that you contribute into this account. HSAs have contribution limits, just like many other tax-advantaged accounts. For 2025, the HSA contribution limits are $4,300 for self-coverage and $8,550 for family plans. Next, deducting your mortgage interest. If you have a mortgage, then in most cases, you'll be able to use the mortgage interest deduction on your tax returns. Mortgage interest can be thousands or even tens of thousands of dollars per year. So this is quite a significant deduction for most taxpayers. But keep in mind, you might not be allowed to deduct all of your mortgage interest. And this is because there are limits to this deduction. In fact, you are only allowed to deduct mortgage interest you paid on your first $750,000 worth of mortgage principal, or $375,000 if you're married filing separate. So keep this in mind. The $750,000 limit was added to the Tax Cuts and Jobs Act of 2017. However, this law is set to expire in 2026. If it does end up expiring, then the mortgage limit that you're allowed to deduct will go back to $1 million instead of $750,000. So stay tuned to see what happens with that. All right, let's talk about claiming the child tax credit. If you have a child, the child tax credit can be an extremely beneficial tax lowering vehicle to help you save on your taxes. For 2025, the child tax credit will be worth a maximum of $2,000. As a reminder, this tax credit is partially refundable, and for 2025, the refundable portion of that tax credit is up to $1,700. So what this means is that if you don't owe any taxes at the end of the year, the government will actually send you a refund for $1,700. Not bad, right? If you do owe taxes, then you can use this tax credit to experience a $2,000 for dollar reduction of your tax burden. This is so important. The child tax credit is set to go through the changes when the Tax Cuts and Jobs Act rule expires at the end of 2025. This credit is set to go back down to $1,000 in 2026 unless the TCJA is expanded. Let's talk about deducting your student loan interest. Over 45 million Americans have student loan debt. If you're one of these people, then you might be able to deduct some of your student loan interest. The student loan interest deduction allows you to deduct a maximum amount of $2,500 in student loan interest paid for your taxable income in 2025. So for example, let's say that you had taxable income of $60,000 and you paid $4,000 in student loan interest. In this case, you'll be able to deduct $2,500 from your taxable income. This would reduce your taxable income to $57,500, which means that just by taking this deduction, your taxable income would be a few $1,000s lower. This could help to increase that tax refund. Now, let's talk about deducting your charitable contributions. Have you already, or are you planning to contribute to any charities in 2025? If so, then your charitable contributions are most likely eligible for a key tax deduction. But keep in mind that in order to be eligible for a deduction, your charitable donations must be able to qualify through charitable organizations. You don't automatically get a charitable deduction every time that you give money to another person. For example, if you're playing blackjack at the casino with your friend Bob and he asks you to spot him $100 for his next bet, no, this does not count as a charitable donation. However, if you give $100 to an organization such as the American Red Cross, Habitat for Humanity, or the Salvation Army, for example, this would count as a charitable donation that would be eligible for the deduction. So, charitable donations can potentially help to reduce your taxable income and therefore enable you to get a bigger tax refund. But remember, keep your receipts in case you're ever audited and the IRS wants proof that your charitable donations actually happened. Let's talk about deducting your medical expenses. If you had to pay for qualifying medical expenses, such as surgeries, ER visits, prescription medication, then you may be able to deduct at least some of these costs. Not all of them, but some. In 2025, you can deduct unreimbursed medical expenses that exceed 7.5% of your adjusted gross income, or AGI, in the year. So if you make $100,000 and you had $10,000 of unreimbursed medical expenses, you would get to deduct $2,500 of these expenses on your tax returns. Of course, medical expenses vary significantly from person to person, so it's not a guarantee you'll be able to use this deduction. But if you're someone who was in and out of the hospital a lot this year, or if you had a lot of medical expenses, then these deductions tend to add up and can help increase that tax refund. Let's talk about deducting a home office. Are you working from home in 2025? If so, you might be able to get a sizable deduction for your home office, considering the fact that many millions of Americans started working from home after the pandemic. This deduction could potentially impact a massive number of people, but be aware that not everyone qualifies for the home office deduction. In fact, this deduction is only available to business owners. So if you're a W-2 employee, I apologize. You will not be able to deduct your home office expenses unless you had a business or side hustle. Even if you have a large number of expenses related to your home office, you can't deduct them unless you have a business. I'm not going to explain exactly how the home office works in this video for the sake of time, but if you want to learn more about it, you can check out this video right here. For today, I just want you to know that this deduction could potentially be worth thousands of dollars depending on the size of your home. So if you're eligible to take the home office deduction, and if you're trying to maximize your tax refund, then this is one of those deductions I don't want you to overlook. Okay guys, so there you have it. 8 techniques that you can use to reduce your tax burden and potentially increase the size of your tax refund. Not everyone will qualify to use every deduction or credit that was talked about in this video, but there are at least a few good ones on this list that you will be able to use. If you want to learn more about maximizing your tax refund using tax strategies, then feel free to get in touch with my tax strategy team by clicking on the link below in the description to book a free consultation. I want to go ahead and take the time right now to answer a question from one of my subscribers. As promised, I have been doing this for the last 6 months. We had another question that just came in. Before I do so, I just want to remind you guys that my tax-free wealth challenge is coming up March 10th through the 14th. It is one of the largest digital tax conferences in the world. Over the course of 5 days, I'll teach the most advanced tax strategies I know. These strategies can literally bring your tax bill down to zero or close to it. The link is in the description if you're interested. All right, now back to the question. The question comes in from Cliff Notes and Anesthesia. It was asked on my business versus personal taxes video. Make sure you check that one out if you haven't already. The question was, Karlton, what do you do when you have to use multiple finance professionals at the same time? I want a one-stop shop, someone who can give comprehensive advice, tax filing on back end, and strategizing on front end and personal and businesses. Well, I would highly recommend that you reach out to Tax Alchemy. We start off doing tax planning first, and the reason why is we won't prepare tax returns or solicit tax preparation just to everybody. There's so many different tax preparation firms, and we specialize in planning. But after we have built the plan for the client or set up the LLC, structured the investments, now it's time to prepare the returns on those clients that we built the plan for. This is what we call an advisory firm, and a true advisory firm should be handling everything for you. The bookkeeping, the taxes, and your entity structuring as well. If you're somebody that's interested in learning a little bit more about tax advisory and you'd like to book a call with my team, be sure to click on the link below. At the very least, I want you to like, comment, subscribe, and let me know what you think of this video. I look forward to seeing you in the next one. Cheers.